When the world feels like it's falling apart, whether it's war, economic collapse, or market chaos, smart investors rush to safe havens. What about you? If the market took a dive tomorrow, where would you put your money? Gold? The dollar? Or maybe something else? Today, we're diving into safe haven assets. The go-to picks that pros trust when everything else is crumbling. Why do top investors flock to these in times of uncertainty? Let's break it down. Safe haven assets are what investors turn to in times of crisis, whether it is war, a recession, or wild market swings. But why? These assets can weather the volatility of stocks or weak currencies and often thrive when markets crash. Take the 2020 COVID pandemic, for example. While markets took a hit, gold shot up by over 27%. When others are losing, safe haven assets often protect your capital or even help it grow in the chaos. During financial crises, most assets such as stocks, crypto, and even some currencies get crushed. In 2008, the S&P 500 dropped nearly 40%, but gold, it rose 25%. Fast forward to 2020's European energy crisis, stock markets plummeted, but the Swiss franc and German government's bonds held strong. Some even posted gains. The takeaway is knowing when to pivot in a crisis doesn't just protect your wealth, it can actually help you profit. So what qualifies as a safe haven? Well, here's the lineup. Number 1, gold. Gold is the ultimate crisis asset. When uncertainty hits, investors flock to gold. It is physical, can't be printed, and has a solid track record of thriving during tough times. Number 2, government bonds. Especially the government bonds from strong economies such as US, Germany, or Switzerland. These are backed by stable governments and are a go-to defensive move in a crisis. Number 3 are safe haven currencies. Think for instance about the Japanese yen or Swiss franc. The yen benefits from Japan's stable economy, while the franc shines because of Switzerland's ultra-conservative financial policies. Number 4, long-term physical assets. These are things like farmland or industrial metals, for instance silver, in politically stable countries. These assets hold their value when markets start to shake. So why has gold been the king of safe haven assets for such a long time? Well, there's 3 big reasons. Number 1 is its intrinsic value. Gold is physical, finite, and immune to any government's decisions, unlike paper money, which can be printed at will. Number 2, the global trust gold has. From London to Istanbul to Tehran, gold's value is recognized worldwide. It is a universal asset that is easily tradable anywhere. Number 3 is its proven history. From ancient empires to modern crises like 2008 and the COVID pandemic of 2020, gold has been a consistent rock. In fact, during the pandemic it surged by 27% in less than 6 months. When markets lose trust, gold becomes the universal language of security. So, to be a smart, forward-thinking investor, always keep a portion of your portfolio in safe havens. In a world full of volatility and uncertainty, these assets act as your shield during a crisis. Plus, many of them, like gold and bonds, are highly liquid, so you can trade or cash out quickly, even when markets are in turmoil. With the X-Chief trading platform, you can trade gold, safe haven currencies, and government bonds with tight spreads and flexible leverage. Now here's the big question. If a crisis hit today, would you go for gold or a safe currency? Drop your pick and the reason why in the comments below. Let's get the conversation going.